Charting the second half, the Wyckoff Method perspective. Welcome to our discussion about the second half of 2020. I am with today my favorite Wyckoffian, Roman Bogomazov, and I'm Bruce Fraser. Roman, welcome.
Bruce, thank you so much, and I'm always happy to discuss charts with you.
Oh, I'm so excited about this because we're going to be able to have a discussion about the second half. Now, let's keep in mind that with the Wyckoff method, we look at the conditions of markets as they are with the expectation that with good analysis, we're going to be able to see the direction that the market intends to go from what the market has been up to this point. Roman, your thoughts on this?
Absolutely. And, Wyckoff methodology is a part of the technical analysis body of knowledge. And it looks at so many different concepts, ideas, disciplines, and all of them are just basically an ability to observe what truly the market is doing and then making some kind of deductions as what possibly could happen. And you and I, we've been discussing the markets for quite some time. We just celebrated our 200th episode of the Wyckoff market discussion. So for those of you guys who are interested in a more in-depth analysis on the weekly basis, come to our class, Wyckoff market discussion, register at wyckoffanalytics.com. Bruce?
Excellent. Yeah, we'd love to have you join our community. So Roman, let's get started. So what we have here is a weekly chart of the S&P 500 that actually goes back to 2015. Below that, we have a crude oil chart for comparison purposes. And you can see that the S&P 500 climaxed in January of 2018 and set up a range-bound condition that followed that. But notice that this range-bound condition has an ever widening volatility, which we would call a broadening formation. And it really is a pretty interesting structure because as we can see that there was a really prolonged sharp advance into the end of 2019 with two peaks above the trend line in January and February of 2020, and that this all took place over the top of this big broadening structure, which was an upthrusting action and overthrow of the trend, and then the very dramatic decline into March of 2020. So from that overbought condition, a very, very sharp decline into a new lower low from that January, February trading range area that we had developed. And so now we're in an important rally, and this rally has gone back up to the trend line where it is climaxed and is now consolidating in that area. So this is occurring into the end of the June quarter. And so this is a very interesting place on the chart for a discussion about what could happen in the second half of the year. Roman, your thoughts on this?
Well, as you were talking, Bruce, I was thinking, what if we would be making this video at the bottom of this reaction? What would we be saying? Would we be saying that we're going to have such a dynamic rally? Actually, yes. There were some analogs that we were showing in the Wyckoff market discussion, Bruce, and especially you brought up the 1962 analog, which we will look a little bit later on, which indicated, some kind of very aggressive rally to the upside. Well, there were a lot of talk on the during the rally. Is this a bearish rally? Is this the rally in the bear market? And I think just looking at NASDAQ, and we're looking at S&P here, the NASDAQ is making the new high today, the new highest close at around 10,258 as of the time of this recording. This doesn't look like a rally in the bear market, so we probably will concentrate more on the bullish outlook. But Bruce, as always, we want to develop any type of scenarios. We want to look also at the bearish scenario as well. So I think that just the first thought is what's going to happen here? Are we going to be able to hold on to these gains? Are we going to be able to advance even more further up? So these are going to be the topics of the discussion of this video.
So any thoughts about crude oil before we move on into this scenario building process?
Well, we definitely finding some kind of point of the resistance. We were thinking at the time of the rally, which was very, very dynamic rally, that the price is going to go into the area of the gap, so into this 40-ish type of zone, and then just kind of going to stay there for some time and consolidate around this area. I don't see oil having such an advance where it just comes back to 60 at this point. I think that there is a little bit too much resistance, overhead resistance in front. What are your thoughts on oil, Bruce?
Well, it's definitely lagging, and I think that it reflects the fact that even though the stock market is acting quite well here recently, that I believe that the oil market is telling us that the economy, even though it is coming back, it's going to come back in a slow and more halting way, and that demand for energy is, if anything, creeping back and not surging back.
Mm-hmm. All right. Should we go to the next slide?
Let's keep going.
All right. Well, here is this analog, Bruce, that you brought up early on after the reaction, COVID-19 reaction has happened, right into our classrooms. And you talked about the 1962 analog. So what did you see at the time, and what are you seeing now?
Well, the thing that really stood out about the structure of the two periods is the broadening formation. So you can see here, we just looked at it in the S&P. We're looking at it in the Dow Jones Industrials because this is what was so predominant in 1958 to 63. So there was an upthrusting action that came at the end of 61, and then a distribution of sorts that produced this downtrend. And we had an upthrusting action in 2020 in January, February, and it reversed down quite dramatically. And in both cases, these were like waterfall declines. Now, what really stood out in the 2020 scenario or situation is that the shakeout actually went down below that declining trend line. And we actually published this chart right when the line was penetrating that trend line construction, and said that this would be a classic place to have an important reversal. Now, the other thing that happened was, notice that in 63, that there was a rally into the rising trend channel of the broadening formation. And we have not reached that level yet, but that was a period where potentially the market could have turned down, but in fact, it didn't. It went through that area and then proceeded to go from 63 to 66 into a really important uptrend, which was the first time that the Dow had reached 1,000, which was in 1966. And so there was much more of the bull market to go after new highs were made in the Dow Industrials. Now, that hasn't happened yet here, but we need to be patient because the potential still exists, and it's acting as though it wants to get to the highs, and the NASDAQ 100 has already done that. So, Roman, your thoughts?
Well, so many thoughts about this analog. Oh boy, first of all, Bruce, that was a fantastic find at the time of the low of COVID-19. Secondly, I think this chart and the PNF shows it even more. After this high, which was the upthrust high, look at for how long still the price was going up. And think about the current sentiment, where we are just basically bombarded with the sentiment of it's got to stop, and it's going to reverse. And it might do so. But as long as the analog works, as long as we are in the uptrend, we're going to respect that. And we're going to just look for the signs of change. And sometimes those signs of changes are going to come in a very smaller way. We just had one on June 11th, big bar to the downside, which was right here. This was a change of behavior for the uptrend. But we have to see what kind of resolution we're going to have out of the shorter term pattern. And our assumption here is that still analog is going to work. The still uptrend is intact until it's broken. So for now, I guess we're still looking at the bullish scenario with an idea that, yes, it's possible, like in 1963, 63, 64, 65, to have a continuation of the uptrend until, again, it's broken. Bruce?
Well, and keep in mind that the Dow Jones of the major averages, the NASDAQ 100 and the S&P 500 and the Dow Jones is really the laggard most index. So the other ones are really even stronger than this. And so there's great underpinnings for higher prices in the, especially in the NASDAQ 100 stocks, which really are the leadership stocks in this cycle.
All right. And Bruce, also just to look at the causality of the COVID-19 bottoming, and we obviously would be looking at this as a short-term causality. But here you're, showing us some of the potential targets that we have in front of us. Could you walk us through this?
So we use a horizontal point and figure counting method in Wyckoff, which is a very old tried and true methodology of determining upside objectives, price objectives. It's unique in its ability to be able to do that. The chart on the left is the SPY, so it's the ETF of the S&P 500. We've just taken a classic 3-box reversal count across the base, which is in green there, and that count takes us up to a count objective range of 328 to 352. So far, we've gotten up to almost a 324, so we're not into the count objective area yet. So there's more potential ahead. The other important thing I would point out about this is that it shows the SPY being able to get to a new recovery high in this point and figure count objective. And so think of that in terms of what we just looked at with that 1962 analog. Now, in the case of the Qs on the right, which is just the ETF for the NASDAQ 100, we are using the same method. We had a really big horizontal count with the Qs, and this count actually, at the time that it formed, gave a count upwards of 244 up to 260. And so this was a new high in the triple Qs, and oh my gosh, it's actually gone to new highs. It's fulfilled the minimum count objective, but there's still more count to go potentially here. And so what a great job the point and figure count of the Qs has done to identify this index being able to go to new recovery highs. Roman?
Well, it's just uncanny, first of all, how the horizontal count works. That's number one. Secondly, again, I'm coming back to this moment when the bearish sentiment was so persistent. And even now, there is a lot of bearish sentiment that the price should go down and should react in a more meaningful way. Maybe we will, into the election cycle and so on and so forth. But it's just very interesting how the targets are being projected during the bottom information, and they're just suggesting the new all-time high, and it's very hard to believe. But it's not our job as traders or analysts to believe, in something. It is our job to observe, deduct what potentially could happen, and then just go with those scenarios. So at the time, these were the targets, and as the uptrend, has been unfolding, this is where we're finding confirmation for these targets and for these ideas. So it's just fascinating, Bruce, how the market unfolds this way. So therefore, our assumption here into the near-term future is that we're going to still have a continuation to the upside. Our expectation, if the uptrend continues, that the S&P 500 and the spiders are going to make the all-time high, and then NASDAQ is already at the all-time high. And NASDAQ is still going to be leading and producing new all-time highs going forward. And then at some point, obviously, this rally is going to stop. And I think, Bruce, we're going to see that stopping of the rally, obviously during this year. And with that, let's go through this analog. And this is just a structural analog. So whenever you think about structural analogs, you have to strip any of the time frames. So we're looking at the Autodesk. This is weekly chart. So I'm just gonna close this off. And this is S&P 500 SPX daily chart. And I'm just gonna walk you through different parts of the structure on the price and volume, and you be the judge of how close the price actually follows this analog. And then Bruce and I, we can discuss, what potentially this means and what our expectation is. So off the high, we have a precipitous decline in both cases. And as we go through this decline, we could put it into different parts and divide it into different parts. Part number one, this is a part where we have a quick sign of weakness, quick decline down on the increased supply signature. The same has happened with COVID-19 reaction. The first leg down was quite aggressive to the downside and had a lot of kind of like insider type of selling. Those were the sellers that potentially knew what was coming or what effect it could potentially have, and they were trying to get out of this position as soon as possible. Next portion of this decline, attempt to go up. In the case of 2020, everything happens much faster. So this reaction up is just only 3 days. And then a very substantial decline as part number 3 on the increase in supply signature. And we kind of see it in both cases. Then an extremely short trading range. And in case of 2020, we know that trading range was even on the intraday basis. We would have to look on the intraday to find it there. So here is our part number 4. After the trading range, a very dynamic rally, which comes to the highs of the trading range. Here it is in 2020, part number 5. After that, we have a last point of support as a higher low. Part number 6, point number 6, same here. And the first rally, to point number 5, and the rally after point number 6, which we're gonna label as 7, both of them had, momentum characteristics, increased momentum characteristics. We could see this in the first rally. We could still see some momentum in the second rally, and then we stopped. We stop for a pause, for a reaccumulation trading range, which has very interesting characteristics as well. We have a higher high as an upthrust in the middle of the range, and look at what happens in 2020, a trading range, and then a higher high and an up thrust in the middle of the range. And then we have into the right part of the trading range in phase C a spring. This is an event where the price tries to commit down temporarily and quickly recovers up. The same happens with Autodesk in 2009. And then what happens after? A continuation of the uptrend and into the climactic, intermediate climactic action that is being followed by a change of behavior type of bar and change type of behavior reaction. We have a climactic run in 2020 into the buy, intermediate buy and climax, and then a change of behavior bar, and then we go into the trading range, which has an apex formation, and here is an apex formation in this analog as well. As we are trying to resolve short-term the directionality of this market, and we're still saying that we're still bullish, it's still going up, it's still up until it's not. We have to see a more convincing evidence that we're going to stop and we're going to change the behavior in a more meaningful way. So our expectation, as it was with Autodesk, is that we're still going to go up, probably into vicinity of the highs. Now, in 2020 case, this latest trading range is actually in the vicinity of the reaction 1 and 2, which did not happen for Autodesk here. Therefore, we created a lower high. Our expectation here is that we're probably going to make an all-time high before we're going to have a much more meaningful reaction. And Bruce's P&F counts actually suggest exactly that. So combining these two techniques are showing us that all-time high in the S&P is actually quite possible. And then after that, a trading range of the distributional qualities, which is going to be very, very fast, and then a much more meaningful change of behavior, which leads later on to a much more meaningful trading range. And Bruce, I'm thinking if this were to happen after the all-time high in the S&P, we're going to drop back into the 3,000, 2950 type of area, and then we're going to consolidate from here. And I was thinking, and I really would love to hear your thoughts, you know, this reaction, maybe this is like a September type of window for us where everybody comes back to work, to schools, and then we might have a little bit of the increased of cases of COVID-19, and then going into the election cycle as well. Bruce, so what are your thoughts just generally on this analog, and then maybe like the timeline of how it could happen?
Wow, this is really a fun analog and very informative. And first of all, I'd like to just point out that when you count the horizontal point and figure area, you do it off of the key points on the vertical. So you count from the LPS over to the left and right to left, beautiful. And then you can see that also is the case on the S&P chart on the right. And so that is how we got the counts we just looked at, is by counting that area. And so here you can see in the analog where there's an attempt potentially to go up to the old highs. In an election year, typically there's an upward bias in presidential election years in the market. And so that upward bias, I'm thinking that area that you have in blue, that arrow in blue, could be, say, September, October. Maybe it's even into election day, first Tuesday in November. Or the other possibility is that test of the highs that comes later is actually into the November election. And then typically after that, the market calms down or cools off somewhat. But that builds another count. That whole area there could be potentially another point and figure counting area that is large and could then give us the potential for a rally like 63 to 66. And so I'm thinking that history tells us in an election year that there's an upward bias in the third quarter, and it goes right into the November election time period. So that would be also consistent with your analog, Ramon.
Very, very interesting. And we'll definitely discuss this more in the Wyckoff market discussion. So again, for those of you who are interested, come join us.
Well, and Bruce, this is what we do in the WMDs, that we do these discussions and look at the market, not only in this fashion, but in other ways too. And it's really just, I think, a great intellectual discussion and a very practical trading discussion of markets. So, Ramon.
All right. Well, Bruce, we have one more slide here of gold, and this is from your blog. So please walk us through this.
Yeah. So if you want to actually look at this chart on a regular basis, go back to my August of 2018 blog, prospecting for a low in gold. And then there's also links to other blogs, and also the golden ticket is another one to look at. But notice now, at the August 18 lows, sorry, I shrunk my screen here. At the August 18 lows, we made a call for the market to have a last point of support and an important rally up to the highs, and that's exactly what has happened. Look at where we are now. Gold has run up into the end of the second quarter, right into an important resistance area that's formed by the 2011 peak and the 2012 peak. And those two resistance areas could be a headwind for gold. In this case, we're looking at the continuous futures contracts. And then over on the right, there's a point and figure chart that we published a while back. And we actually use GLD, which is the ETF or ETN of gold. And that count, which is the yellow area, the yellow box, counts up to 164.05, 166.09. And when I checked today, gold was at 166.10. So this is like July 1st. So right at the end of the quarter, we have gold achieving this intermediate point and figure count objective that also suggests that we may have fulfilled a point and figure count that leads to a pause. That doesn't necessarily mean that it's a reversal down, but it could mean that a new count, a new point and figure count has to be built, which could take a few weeks to a month or two. Roman?
Yeah, so the main point for me on this chart, Bruce, and yeah, we've been so all over the gold since 2018. This was a great call right here, not just on the breakout, but also on the character acceleration of the price movement. So the main idea here is that we are in the uptrend, we are close to the resistance point, and we're close to the targets. So trade accordingly. Bruce?
Well, Ramon, we're getting down to the end of our time that we have for this discussion, but any concluding thoughts that you might have about the second half of the year?
Well, I would say that even though, we are presenting different, scenarios here, we definitely want to look also in the classroom into the bearish scenario as well. So keep that in mind. And then those are just scenarios. So we just have to see whether they're going to follow through or not. And that's the main idea with all of the scenarios.
Ramon, thank you so much. And thank you all for listening to our presentation. And come join us at Power Charting and at Wyckoff Market Discussions, and we will see you then. Thank you, Ramon.
Thank you, Bruce.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.